My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People make friends, just trying to make you some money. My job, not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Do you want to know the secret ingredient behind this market's incredible rally from the bottom last year? I figured it out. It's the short sellers. When the bears bet against a stock, they borrow shares, then sell them. But if that bet goes wrong, they're forced to buy the stock back. Buy. And that buying is like rocket fuel for stocks. Oh, we had a bunch of examples today, even as the averages were pretty sedate. Dow inching up 15 points, S&P advancing 0.30%, NASDAQ gaining 0.35%. Just like ordinary investors will throw in the towel and sell when their favorite stock gets obliterated, short sellers throw in the towel when their favorite targets go up too much. The invisible cover of their defeat is evident every day in this market, and it's something we don't talk about enough. How the heck do you think we've managed to go 6 straight months without a 5% decline? Capitulating short sellers are like a fifth column supporting the bulls, even if they're not doing it by choice. Most of the time when someone goes short, they have a thesis about overvaluation, along with a sense that the situation is very precarious. I mean, they want fear. They want danger. You need more conviction to go short because if you're wrong, your losses could be unlimited. Of course, you get a bad piece of news, maybe a shortfall, maybe a scandal, and boom, the shorts clean up. When you layer on a hideous balance sheet struggling under a mountain of debt, well, it's even better for the shorts because you get the possibility of a total breakdown. The stock could go to zero. But thanks to a new generation of investors who treat short sellers as prey, we've got a very peculiar market. Take AMC. Honestly, this movie theater chain, I mean, it has no business being solid after over a year and a half of COVID. It owes a ton of debt. There's little demand for its product. And the in-home competition keeps getting fierce, as we'll hear from Disney later tonight, which is cleaning up. And judging by the extremely positive reaction, by the way, to an insanely good quarter from Disney, it may, too, be a benefactor of a short squeeze going bad, both tonight and then tomorrow. 8 months ago, AMC was an obvious short candidate. Betting against this thing seemed like shooting fish in a barrel. Then Wall Street bets came along and started ganging up against the shorts, pushing stocks like AMC higher in order to force the bears to buy them back. And that allowed CEO Adam Aron to raise $5 billion in inflated common stock, at least where a typical heavily indebted company stock with no revenues might be enough to stave off bankruptcy for the next 5 years. He saw the meme stock formula, and he decided to do everything he could to embrace and harness, if not love, the power of these newfound ape traders, as he calls them. Well, they call themselves that, and he called them that on the call. Now, every time a bunch of shorts try to go after AMC, they get smacked down by the legion of bear bombers. The thing is, this action makes no sense to most of the veterans who've been in business for a long time. The analysts are paid fortunes, right? Fortunes to predict the directions of the stocks they cover. But they're almost uniformly negative about AMC. Several of them are still using $1 price targets for this $33 stock, and their conviction has not been deterred, not at all, by the better-than-expected quarter the company reported this week. Some of that's because they think the Delta variant will be finally the thing that crushes AMC. Some of that is because they look at the balance sheet and said, who the heck would ever want to own this stock? To me, their view is nuts and pathetic. See, AMC is no longer trading based on the fundamentals, and anyone who tries to pretend otherwise is only fooling themselves. When you have a group of shareholders who, when faced with imminent bankruptcy, simply buy the stock even more voraciously, can you imagine what happens if anything good happens at AMC? Oh, they're never going to let go. You'll catch a double. Whenever you talk about AMC, people immediately think of, well, GameStop, the other major meme play. But they're not really in the same league. You see, unlike AMC, GameStop actually has a picture-perfect balance sheet, and its chairman, Ryan Cohen, has the Wall Street Bets crew in the palm of his ice cream-filled hand. I'm not saying either of these stocks are necessarily worth buying here, but you can't short them because the shareholder base will destroy you every time. Does GameStop really have a bright future? I don't know. And honestly, I don't even care because it doesn't matter. This is all about the stuff dreams are made of. Maybe GameStop becomes a crypto deposit center. Maybe they turn their stores into gaming palaces. Maybe they find a way to make money off virtual reality. I don't know. I think they're better off keeping their plans vague because for the moment they've got an almost unlimited source of capital, and that gives them a lot of options. Again, it's insane that GameStop can pretty much raise as much money as it wants. That's not supposed to be happening. No analyst who follows this stock believes it belongs anywhere up here. Based on the fundamentals, the analysts are right. What future is there really for brick-and-mortar video game retailer? Will you give me a break? But just like AMC, the stock no longer trades on the fundamentals. The memesters have their own priorities, and as long as they believe in GameStop, well, there's only so low it can go. All right, now let's contrast that with Tesla. Now, this one's been a huge battleground, right? I mean, you got a real smart guy with a dream to build the best car in the world, an electric car, and he actually delivers an electric car. He delivers on his dream. He does it with the help, sure, of government tax credits and short sellers who kept pushing the stock higher when they're forced to buy it back. In order to close out the positions, remember they have to buy stock, and that allowed Tesla to raise even more money. What a virtuous circle that was. Mostly, though, Elon Musk makes it happen because he's a brilliant guy with a brilliant team. The car's incredible. Now, I want you to contrast that for a moment with Adam Aron at AMC. Oh, Adam's clever as all get out, and like Elon Musk, he's got a real sense of showmanship. But at the end of the day, AMC is a century-old chain of movie theaters. Sure, they can sell drinks and soda water and dinner even, and pop. Hey, they can take payment in Bitcoin. They offer free popcorn for shareholders. Ultimately, though, AMC is not a car that runs on water. Adam is not going to develop a cancer vaccine. You go there to watch movies, just like you've always done. Except this time you can get COVID if you're sitting next to someone with the Delta variant. Again, all of that means nothing to the Wall Street Bets crew. They don't care about the fundamentals. They don't even care about the Delta variant. They care about their ability to boost the stock on the backs of the short sellers. Now, you may not like it. Warren Buffett, for all I know, doesn't like it. But the apes, they're very clear-eyed about what they're trying to accomplish. The whole thing is kind of it's a multi-level marketing scheme meets chain letter mini bull market. Why does all this matter? Well, because you've now got an army of short busters who are eager to jump in anytime the short sellers get too crowded. That means the stocks of companies with problems, the kinds that are liable to attract short sellers, they got a degree of protection it never had before. Never! These days, it's much more dangerous to short anything. The other day, Albertsons, the heavily indebted grocery chain that I've liked, to put a new CFO. Oh, boring. Except for, wait a second, did a great job at Best Buy. Next thing you know, the stock jumps 20%. Why? Because Barclays, which had been telling people to sell it, switched and told people it was okay. There goes the prop. Here comes the cover. I don't know where this ends. But I can tell you that as long as there are lots of people shorting stocks that are popular on internet message boards, as long as there are lots of money managers shorting the entire market, betting they'll be dragged down by the weakness in bonds or the Delta force, the bears will have a very hard time putting this market down. Here's the bottom line. Get this. Understand it, especially you analysts out there. Until something happens that truly panics the bulls, creating natural sellers, this is going to be a very tough environment for the shorts. And as long as they know that, maybe they'll wait until they really have something that scares the daylight out of the owners, or else.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.